If you own Texas real estate in your name, you are one lawsuit away from losing everything you've built. I'm Hamilton Rucker, Texas real estate attorney, and today I'm going to show you the single most important move every Texas real estate investor needs to make: forming an LLC. Stay with me because by the end of this video, you'll have a complete step-by-step plan. Forming an LLC in Texas, a simple guide for real estate investors. Today, we're walking through LLC formation for real estate investors, and from why you need one to how to set it up correctly to the brand new federal rules that every Texas investor has to know about right now. Whether you're buying your first rental property or building a portfolio, this information applies to you. Owning property in your own name is risky. Let's start with the problem. When you own investment property in your own name, let's say Jane Doe, you are personally on the hook for everything that happens on that property. A tenant slips and falls, they sue you personally. A contractor gets injured on the job, you personally. Environmental issues, code violation, a dispute with the neighbor, everything comes back to you. Your personal bank accounts, your family home, your car, your retirement savings, all of it is exposed. In Texas, real estate is one of the most common sources of personal liability. That risk is no investor should be willing to take. Why Texas investors choose the LLC? The LLC, the limited liability company, is a vehicle of choice for Texas real estate investors for three powerful reasons. First, credibility. When you're buying and selling properties, operating as Rucker Properties LLC sends a professional signal to sellers, lenders, and tenants. You're a business, not just an individual speculator. Second, asset protection. The LLC creates a legal wall between the investment property and your personal assets. If someone sues you over the property, they can only go after what's inside the LLC. They can't reach your personal life. Third, financial separation. The LLC has its own bank accounts, its own accounting, its own paper trail. This separation is not just good business, it's what makes the legal protection hold up in court. Critical decision. Who runs the company? Before you file anything, you need to make sure that one critical structure decision happens, and it's how is the LLC managed. In Texas, you have two choices. Member managed means the owners, the members, run the business directly. Every owner has the authority to make decisions and sign contracts. Simple, but it exposes all members. Manager managed means you designate specific individuals or entities to run day-to-day operations. The managers have authority. The other members are passive investors. For real estate investors, I generally recommend manager managed. Why? It's because it lets you bring in investors or partners without giving everyone signing authority over the company. It's clearer and more professional and more legally defensible. The choice must be declared in your formation documents. You can change it later, but you have to do that with an amendment. Traditional LLC versus series LLC. Texas offers something most states don't: the series LLC. If you own multiple properties, a standard LLC puts them all under one legal roof, meaning a lawsuit over property A could potentially affect property B in the same LLC. A series LLC lets you create individual cells or series with one master LLC, with each series holding a separate property. The liability of each series stays confined to that series of properties. One filing fee, one registered agent, multiple shields. The trade-offs? Well, a series LLC are more complex to maintain, and their legal recognition across state lines and in federal courts is still evolving. For a Texas investor with multiple in-state properties, the series LLC can be a powerful structure, but it requires careful drafting and maintenance. Talk to a Texas real estate attorney before you choose this type of route. So, step one, naming requirements and registered agents. All right, let's build your LLC. Step one, name and registered agent. Your LLC must be unique in Texas. You check the availability at the Texas Secretary of State's website, sos.texas.gov. Your name must include limited liability company, LLC, or LLC that designates and what puts the words on notice that you're operating as a limited liability entity. You also need a registered agent, a person or company with a physical Texas address who's authorized to receive legal documents on behalf of your LLC. This can be yourself if you have a physical Texas address and are available during business hours, or you can use a professional registered agent service. That costs about $50 to $100 a year and keeps your home address off public records. Either way, the registered agent is required. No LLC is valid without one. Next, step 2, filing with the state. Filing for your certificate of formation with the Texas Secretary of State. This is the official document that creates your LLC as a legal entity under Texas law. The filing fee is $300. The Secretary of State will process your filing and return a file stamp certificate. Hold on to that document because you'll need it to open your bank accounts, apply for your EIN, and prove your LLC's existence when you close on properties. This step is straightforward, but it's only the beginning. Filing the certificate gives you the shell. What you do in step 3 is what actually gives you the protection. Step 3, the real protection. This is the step most people skip, and it's the step that determines whether your LLC protection actually holds in court. Think of your LLC like an iceberg. The certificate of formation you filed, well, that's the tip above the water. What's actually doing the heavy lifting is everything beneath the surface. Your company agreement, your meeting minutes, and your membership records. The company's agreement is your LLC's constitution. It defines who owns what, who has authority to act, how decisions are made, and how profits are distributed, and what happens if a member wants to leave or dies. Without a solid company agreement, you're operating on whatever Texas defaults say, and those defaults are not written with your specific situation in mind. Meeting minutes might sound corporate and old-fashioned, but that's what you're here to prove that you have a real LLC, an operating business, not just a paper entity created to avoid personal responsibility. When a plaintiff's attorney tries to pierce the veil of your LLC, the first thing they do is subpoena all of your records. And membership records track ownership officially. Who the members are, their ownership percentages, and any transfers. These documents are not optional accessories. They are the foundation of your legal shield. So step 3, a little bit more, is the danger of minimalist forms. Here's what I want to be very direct with you. The internet is full of cheap, generic LLC formation services. You pay $49 or $50, $55, and you get a bare bones certificate of formation and maybe a one-page operating agreement template. I've seen these. They do not contain the clauses that protect Texas real estate investors. They don't address what happens in a lawsuit. They don't define management authority. They don't handle buy-sell provisions or member succession. In a dispute, a minimalist operating agreement is almost as dangerous as having none at all, because it creates ambiguity that gets resolved against your interests. The LLC itself costs $300 to file. The real investment is in having an attorney draft a company agreement tailored to what you actually own and how you actually operate and what risk you actually face in Texas. So let's move on to step 4, moving your assets into the LLC. Step 4 is execution, getting your property and finances actually inside the LLC. If you're transferring property you already own into your LLC, you do that by recording a new deed from yourself to your LLC at the county courthouse. This is not optional. A property still tied in your personal name is not protected by your LLC, no matter what your operating agreement says. Get the deed right. Next, open a separate bank account in the LLC's name using your EIN, your federal employee identification number. This is free to obtain from the IRS. All rental income goes into that account. All property expenses come out of that account. And here's the golden rule: never commingle personal and business funds. That's one mistake that many people make: running personal expenses through your LLC account or depositing rental income into your personal account. This is the single most common reason why courts allow plaintiffs to pierce the LLC veil. And just don't give them this opportunity. The new rule: the Corporate Transparency Act. Now, I need to talk about something that is new and critical. The Corporate Transparency Act. This federal law requires most LLCs and corporations to report the beneficial ownership information, the BOI, to FinCEN, the Federal Crimes Enforcement Network. Who has to report? Anyone who owns 25% or more of your company, or anyone who exercises substantial control over it. Your report, their legal name, date of birth, residential address, a copy of their government-issued ID. Why does this matter to Texas real estate investors? Because the most LLCs created to hold real estate fall squarely under this reporting requirement. The anonymous LLC era, where you could buy property through a shell company with no public disclosures, is over at the federal level. This is a new legal reality, and failure to comply means serious federal penalties. Keeping the shield strong. Forming your LLC is not a one-time event. In Texas, your LLC must file a public information report, the PIR, with the Texas Comptroller annually, due by May 15th. Miss this filing and your LLC can be forfeited by the state, which means you lose your limited liability status entirely. Courts have held that operating through a forfeited LLC can expose members to full personal liability, as if the LLC never existed. Beyond the annual report, keep your records updated. Revise your operating agreement when ownership changes. Document major decisions in writing and maintain the separation between the business and personal assets every single day. Your LLC is a living legal structure. It requires maintenance to keep the shield up. LLC formation checklist. Let me give you a quick summary checklist. 1. Decide on your management structure. Are you going to be member managed or manager managed? And whether you need a standard LLC or a series LLC. 2. Choose a unique Texas name and appoint a registered agent. 3. File your Texas Certificate of Formation with the Texas Secretary of State and pay the $300 fee. 4. Draft a comprehensive company agreement and maintain your membership records and meeting minutes. 5. Open a dedicated LLC bank account. Transfer your properties by deed and obtain your EIN, and never commingle funds. And don't forget the new federal requirement. File your beneficial ownership information report with FinCEN, and then set a calendar reminder for May 15th every year for your Texas PIR. That's the complete roadmap. Now, building your shield the right way. The LLC is the foundation of every smart Texas real estate investor's legal strategy. It separates your personal life from your investment risk. It signals to the market that you're a serious operator, and it positions you to grow your portfolio without growing your personal exposure. But I want to be honest with you. An LLC you form yourself online with a generic operating agreement may give you a false sense of security. The protection is in the details, in documents drafted by someone who understands Texas property law, Texas LLC statutes, and the specific risk you're taking on. If you're ready to build your shield the right way, you can reach out to me or find another qualified attorney in your area. We help Texas real estate investors structure their holdings correctly from day one. The link is in the description below, and if you found this video helpful, please subscribe. We cover Texas real estate law every week. I'm Hamilton Rucker. Protect your investments and build it right. Subscribe and like. Thanks.